Welcome to StockMarketFunding.com, home to the masters and the options. We are market makers nonetheless. And when we had the live trades on our stock market funding site, we cashed that in up here at $40 a contract. Now they're down to $5. That means the public rode these all the way down, and the SMF is going to buy them right now. And Brian Plain, tell me if you got hit. All right, what we're showing people here is the $250 call. The high was $860. We got hit at $550, 20 cents off the low. We are wholesale market makers here. Now I'm going to go and show you where we got hit here. And these contracts is a 110 call in the money on First Solar. They were $9, and we are hit at $520 and $540. And we are hit on 10 contracts. We damn near saved $4,000 on our entry. And as an SMF market maker in options, it's about the market maker options training program buys these spreads at these wholesale prices and then sells them back to people like you, the public. And they sell them to the public. They buy up here and they like to hold them down. And it's quite opposite of what we do as a professional market maker in the option versus all the other people out there. And our entry here versus the retail high, they closed at $11 on Friday, and we're hit right down in here. And I did the same thing on Apple. And that's the gift of being an SMF trader, market maker. I will show you something else on the tape. And what I'm going to show you as being the public is, you know how much money you've lost in trading options if you ever watch this video. But people never learn. They never do. They don't have a system. We do. We have a mathematical options trading platform. Back tested over 20 years, and this is why we get the kind of pricing that we get. And this is going to get deflated right here, right here. Okay? So wholesale bid is down here. Retail markets were up in here. This whole area. All retail people. Wholesale market maker SMF is hit down here. We've eliminated our risk during the options expiration. We got a $110 call on First Solar. And the equity price is going to get sold out on the day at $112.36. Here's a daily chart. And basically, it's a free-for-all down to 110 support. But more importantly is we're going to get oversold. And here's the 3-minute chart. What a nice short right here that people are taught to do. The nice thing about this trade, just so people know, is that we are going to have a bounce because we're getting awfully low here. And at that time, wherever those contracts are, Brian Plain will add some more based on this percent DS being down. That means that we're going to get sold out, and that means that we will have a bounce. But that doesn't mean we're going to have hardcore momentum to the upside. It means that, once again, their mathematical system, our platform that we have, is going to tell them that we are going to bounce. And we are. And I would suggest to tell people to go long First Solar right now, Ray, because we're getting sold out down here at 2 point. Why not? Look at you just go light. You go light on the entry because you're going to turn. Yeah, I would. Yep. Okay, you kind of slid the bid, but look at where you're at. So once again, you're buying into weakness for a bounce. And wait, you're going to have to wait until the seller turns out you're 2.56. You're not going to go to zero. I've never seen one. And that means that as the sellers panic out of the last part of the move, that's where the bounce will come in. If you buy 100 shares, you don't have a lot of risk. We don't add or scale in until the seller is out. Once the seller is out, then that's where we start to move in because of this deep intraday oversold condition.